How to legally pay zero in taxes every year. We're gonna show you guys how we have been taught to do it and how you should be looking to do it as well. As always, hit the like button. You know, it's just that little button right down there. Just tap it. Guys, have you ever heard of the saying, you should pay your fair share? Or, I got you one. President Trump. Why was Trump's tax bill almost zero? Everybody's heard of that. Everybody's seen it. The Democrats come in and say, well, you can see our tax bill. The reasoning behind those is what I'm gonna tell you about today. I used to believe that the more taxes I paid, the better off I was. Because the more I pay, the more money I'm making. So if I made $1 million and I had to pay $200,000 or $300,000 in taxes, I was taught that that's great. It's exactly what you should be doing. You should be paying more because you're making more, and you're making more, therefore you get to pay more. Then I went to a conference about real estate investing. And in that conference of real estate investing, I learned that through real estate investing, you can get a huge amount off on your taxes. When you buy a lot of assets, you get to depreciate those assets over a 27-year depreciation schedule. That depreciation allows you to offset your capital gains or your earned income. Earned income, or your flip profit, or your short-term capital gains, or anything like that, is your earned income. What I'm gonna teach you about today is what's called cost segregation studies. Stay to the end. I'm gonna give you exactly who to use for your cost segregation studies. And throughout this video, we're gonna show you all the steps necessary where you can have a big goose egg on your taxes. I am not the smartest person in the world, okay? I learn from other people. I probably don't know all the ins and outs of what cost segregation actually is, but I know these main points. Number one, you wanna buy property above $200,000. Number two is you're gonna do a cost segregation study from a cost segregation company. Then you're gonna take that cost segregation study and you're going to accelerate the depreciation from that cost segregation study off on your tax bill. These cost segregation studies are for people that have equity in the property. So if you're in a partnership, if you're in a GP-LP structure, anybody that has equity in the property is going to be able to benefit from these cost segregation studies. You're gonna take your cost segregation study, $200,000 property, you're gonna hire a cost segregation company, you're gonna pay them to do the study, and then they're gonna come back and tell you how much depreciation you can take in year one and year two. Now, of course, the bigger the property, the more you own, the more you get off on your taxes. The smaller the property, the less you own, or the less percentage of the property you own, right? So we'd even give cost segregation studies to our large properties where we see people invest 50 to 100 grand on, and they still get 20 to 30,000 off on their tax bill. It's super beneficial. So how does this work? So take your property, you do your cost segregation study, and you get an amount. So that amount is your year one depreciation. If you are a full-time real estate professional, which means you don't have a W-2 income, okay, and you're a full-time real estate professional, you get to take that off your bottom line tax bill, which is humongous. So if you have a 100 grand tax bill, you buy $1 million property, and that $1 million property is just you that owns it, you can come back and wipe out your entire tax bill. If you are a real estate investor and are paying taxes, fire your accountant. They don't know what they're doing and they're not helping you pay the least amount possible. What's the downfall? What's the issue? Why is everybody not doing this? Why does everybody not know about it? Well, the Trump tax law is what put this into place. Will it stay there forever? Who knows? It's there for now. Biden could end up changing it, but use it while you have it. He is trying to take 1031 exchanges away, which could affect you with some of this cost segregation, because there is what's called a recapture. So if you have the property, you do a cost segregation study, 3 years down the road, you sell the property, they are gonna make you recapture that amount that you saved in taxes. That is why a 1031 exchange is so valuable in these cost segregation studies, because then it just pushes it on to the next. There are some downfalls with the recapture, but as long as you're continuing to buy new properties and have new assets, your tax bill goes further and further down. It's what we do, it's what you should be using. So I told you at the end of the video that we would give you our cost segregation guide. We're gonna leave it in the description of the video so that you can use them. They are phenomenal. They do cost money. I do not have an affiliate with them, but they are a phenomenal way to get this done. And as always, thanks for watching, guys, and don't pay any taxes if you can avoid it.